Hello. So today in this video, I'm going to talk about how to learn risk modeling. So we learn about how you can learn quantitative risk modeling, and those who are not familiar with what quantitative risk modeling is, let me give a brief intro about what is risk modeling. Well, risk modeling is a field where people use quantitative or mathematical techniques to solve problem in risk management, especially in financial risk management. There are areas, non-financial risk management areas, where even risk modeling is used, but risk modeling is primarily used in financial risk management. So you could think of it as like using data science, machine learning, or statistical modeling, or simulation techniques, optimization techniques to solve problems in different areas of risk management. Now, risk management is a field that is closely associated with the field of finance, and it is quite mathematical. And in various areas of finance, risk management is used. In fact, it's a mandatory thing nowadays, especially after the financial crisis of 2008. The financial regulators have made it very clear that there has to be risk management teams within different financial service organization, and within risk management teams you have specialized risk model development team that build different kind of mathematical models to solve problems in risk management. And you can find these teams in either in banking or in fintechs, trading firm, asset management firm, rating agencies like S&P and Moody's and Fitch, insurance firms like AIG and Prudential and so on, consulting firms, the big four consulting firms, they hire risk modeling people. All the major banks, where European banks or American banks, Asian banks or Middle Eastern banks, all of them hire risk modeling professionals. The people coming from mathematical background, from economics, from econometrics, statistics, maths, physics, and engineering, and so on. Fintechs, right? The new age payment companies like Wise or PayPal, these companies also hire risk management, risk modeling professionals, right? We'll talk a bit about what are the different types of risk modeling and how to learn risk modeling in general, right? So that you can fit into any kind of risk modeling profile, right? So as a career, this is a career that really suits people who are interested in finance and mathematics. Now, you may not be very sure whether you have interest in finance or not, but you probably have some clarity as to whether you have interest in mathematics and mathematical modeling and programming or not, right? If you're not sure that whether you have interest in finance, I would highly suggest you to just read a couple of books in finance and learn a bit about finance, right? And see for yourself whether you like finance as a subject or not, something that you like to pursue as a career or not, right? And what kind of academic background you need to have in order to work in risk model development. Well, you could be an economist or a finance professional. You may be having a PhD or MSc in physics, mathematics, engineering, statistics, econometrics, you name it, right? I have seen people from geology background, geography background, even liberal arts background working in this model development, but it's nice to have an academic background in quantitative academic field, right? The pays are quite okay. You make quite decent pay. In fact, most jobs in finance pay well, but there is also a bit about the work pressure, which is somewhat higher compared to what you may have seen in other fields. And it's a stable career, relatively stable career, for one good reason is because it's a highly regulated area. So the banks have to do modeling work, risk modeling work, because they are supposed to meet some regulatory requirements, and for that they really need to hire risk modelers. So the career wise it's somewhat stable, but there are challenges, obviously, like in any other career you have challenges, and I'm going to talk a bit about that, right? But how do you learn it, right? This is one common question I get from people. Well, there is no short answer to this question. Each would have his or her own way of learning, right? And I would like to touch upon the various paths you could take, the various ways in which you can train yourself in this area if you're interested in getting into this field, right? So one thing is that there is no specialized degree program as such that teaches you risk modeling, right? There are specializations on mathematical finance and financial engineering, quantitative finance, but most of these programs are tailored made for various other things. Some are tailored made for trading and asset management, some are tailored made for derivative pricing and that kind of thing, which is one kind of risk modeling. But many areas of risk modeling are not very well covered in these graduate programs. And second thing is that it's not very specialized, as in you don't have specialized program as such in risk model development. You will be learning a lot more than just risk model development. And obviously, doing a full-time degree is not for everybody, right? It's not easy for everyone to go and do a full-time specialized degree. There are academic certifications. You can find various US universities and European university providing such certifications. They're actually quite good, except the fact that they may not be teaching you anything that is, or rather, I would say that the gap between academic teaching is quite different from that of the real world, right? So that gap is actually a problem in my view. What I have seen, some certifications are good. I mean, the certifications will give you a good background of the theory, but in order to learn what really happens in the real world, right, in the industry, right, you really need to then get in touch with the people who work in the industry, right? Because academic degrees or certifications are taught by academicians, professors, and most of them have no practical experience or real world experience. Self-study is also a good option, just that it's not for everyone. Not everybody is disciplined enough to learn everything from books and YouTube videos and blogs, but that's obviously an option you can explore, right? But before you learn risk modeling, it's important to know a bit about risk management, finance in general. Just read a bit about macroeconomics, read a bit about risk management. Couple of Google search or search on ChatGPT will be okay, right? Will give you enough knowledge about what this field is, right? You should have some knowledge of finance to just begin with, knowledge of accounting, knowledge of financial ratio. You should be able to read a balance sheet and so on. So basics, but very important before you learn risk modeling. You also need to learn a bit of regulations, right? If you do a bit of search on Google, you can find regulatory papers from Federal Reserves, from Bank of England in the UK, but also the European Commission of Banking, ECB in the Europe. So you can find some of these papers. There's just far too many of them, and as a beginner you might be just lost actually if you really want to read them. Always get in touch with someone who is working in this field. Find a mentor. I think that's the easiest way to get started. You also need to learn statistical modeling, econometrics, financial econometrics in particular you need to learn. You need to learn like linear regression, logistic regression, different type of regression like quantile regression. You need to learn a bit about survival analysis. Machine learning is very important. Learn time series modeling, volatility forecasting. Those techniques are important. Simulation optimization also, Monte Carlo simulation, linear and non-linear optimization techniques, very, very important skills. So if you really come from quantitative background like mathematics, physics, or engineering, really helps, because you probably would have learned a bit about mathematical modeling already, right? But you just need to learn how to use these techniques in the world of risk management. There are various types of risk management, and each risk management department would have their own modeling team. So risk management is primarily of two types. One is for the lending world, which is about providing loan to a customer, and the other one is for trading world. Okay. And there are some risk management areas which are associated with both, right? So lending world is mostly with credit risk modeling, wherein you'll be developing statistical model to predict the chances of a customer not being able to pay back the loan or repay the loan, or what could be the expected losses on a given loan, and so on, right? And there are many things, right? Using modeling to sort of manage portfolio, a lending portfolio, that is one application of credit risk modeling. Understanding the customer behavior could be one. Trying to predict the collection, that could also be one area of credit risk modeling. So there are various areas of credit risk modeling. Primarily is you'll be working in areas such as development, validation, stress testing, monitoring, and so on. Okay, so each modeling department would have separate sub department. One department would be developing the models from the scratch, and another department, independent department, would do the testing of the models. Okay, that is known as the validation department. You have also a department that does stress testing, scenario analysis, which is essentially just ensuring that the model works fine in all kinds of uncertain scenarios, right? There is a dedicated team that works on that. You have also a team that constantly monitors the performance of different models. You also have data teams, by the way. Every modeling department also has a data team. So as a risk modeler, you'll be working with any one of these sub department, right? And each modeling area has these sub departments, right? On the trading side, you have the market risk modeling. That means when you trade financial assets in the financial market, it could be equity, it could be commodity, it could be derivative, it could be currencies, anything. There is always a risk of losing the value of the asset, right? And because of which you could be incurring losses, right, in the portfolios, right, in the traded portfolio. And that something is modeled through market risk modeling. You'll be using simulation techniques, time series forecasting. You'll be also using some, mostly simulations, time series type of modeling, but you may also use some other techniques such as valuations of financial assets. Those techniques you'll be using for model development. Then there is a new area called climate risk modeling. It's very upcoming, and it's about incorporating climate risk, environmental risk into the different areas of risk modeling, whether it's market risk modeling or credit risk modeling or other areas of modeling. How do you ensure that climate risk, right, change in the weather, change in the policy related to the climate and environment by different countries or even globally, how is that going to affect the profitability of different customers in the credit risk modeling space, or the valuation of different financial assets in the market risk space? That is a very interesting area of modeling nowadays. Operational risk modeling, right? Rare event modeling is also known as, like, there are events which are more operational, right? Some guy in the bank, let's say, did fraudulent activity, right? That's an operational risk event. Some customer committed frauds, that's more operational. IT issues, or some natural calamity that was unexpected, right? So operational, as the name suggests, is risk related to different operational activities of the financial institution, and that modeling is very crucial. And nowadays there is so much of emphasis given by the regulators on operational risk modeling. ALM treasury is quite a big area of risk management, often not talked about, but asset liability management and treasury is one such area of risk management which is extremely mathematical and amazingly interesting if you're someone who has a strong interest in finance, right? So there you will be doing model development or validation of models related to either liquidity. That means whether the bank has enough liquidity to cater to different demands, different requirements in the future, based on the in and inflows and outflows of the deposits that you have on the balance sheet. But you also have other areas such as interest rate risk, wherein you assess whether change in the interest rate, okay, has impact on your profitability, but also on the other areas of risk, right? So ALM is very extremely interesting area of risk modeling. There is another model development area newly established. It's called model risk. It's not a separate risk as such, although some regulators like the Bank of England consider it as a separate form of risk, but not everywhere you have such separate department on model risk. It's about risk associated with just use of mathematical models, right? So quantifying the risk of using mathematical model for risk assessment, okay, that itself is a risk area. It's considered a risk area in many banks, many areas, many jurisdiction, right? England in particular has this. So as a risk modeler, you'll be working with any of these areas. So you could be specializing in one of these areas. As a beginner, I would suggest not to be too much worried about the specialization. Try to learn at least couple of these areas. Okay, you could be learning like credit risk modeling, market risk modeling, climate risk modeling, like 3 of them. Okay, or you could be learning all 6 of them, right? Most jobs are with credit risk modeling and market risk modeling. There are not a lot of jobs on climate risk modeling, operational risk modeling, ALM, and model risk. Although ALM is also very upcoming, and even climate risk is quite a big area nowadays. Model risk as well. But most jobs you will find are either in credit or market, right? I think about 70% of the jobs probably are just credit and market risk. Again, this is a ballpark figure. Rest 30% are on the other areas of risk modeling, right? Some tips I would like to give to beginners is, one thing is that do not try to specialize in one area, just one area, right? As a beginner, you should not specialize. Try to learn more than one area, because you never know whether you will be able to get a job in one area or not. So it's good to have couple of areas of specialization. That will increase your chances of getting a job. Okay, do not try to go deep as a beginner. I mean, you can go deep later on in your career, but don't try to go into depth as a beginner. And that's a mistake many students do. They try to learn everything at depth, and then they lose interest, and they just know tiny bit of it very well. Unfortunately, that doesn't work as in the real world. In the real world, people will expect that you understand the jargons well, you have enough knowledge to get started, and so you need to cover the breadth. Theory is not enough. You need to also do some projects. So very important to do some projects. Make sure that you understand the data and regulation, and not just modeling. That is also a mistake many people do. People focus only on modeling and don't learn about finance, data, and regulation associated with risk management. That's a mistake. You could go for either a master's program in quant finance, financial engineering. Expensive, not for everyone. You need full-time commitment. Certifications like FRM, CFA, CQF, they do help. FRM and CFA are very well recognized certifications in the field of risk management. Unfortunately, they don't teach much of mathematical modeling. That's a problem. And obviously, the time commitment is anywhere between 1 to 3 to 4 years, right? Again, that's not for everyone. But good certification in long run, but not in short run. CQF is super expensive and not ideal certification for absolute beginner. If you have money, that's a good thing, but otherwise just skip it for now. You could do that later on in your career, once you have money, you have earned some money. Later on, I would suggest to go for short courses as a beginner, something that you can do in about 3 to 6 months time. Find a mentor who can talk to you, who will guide you a bit. Very important. How much effort that will be needed? Well, as a beginner, right, you'll be needed to at least 3 to 6 months to learn one or more than one areas of risk modeling, right? Again, let me tell you, this is beginner level knowledge. You will never be able to master everything in 3 to 6 months time. So that's an impossible target. You need to put in about 10 hours a week in about 3 to 5 6 months time. As I've said, learning from a mentor is better than doing self-study, although some people can do self-study. And if you have time and money, then go for certifications and full-time education. That's also an option. All right. All right, so these are things I wanted to share with you. Thanks for listening in. And if you have any questions, let me know in the comment section or just reach out.